having me back.
Talk us through, because we have got some minor concessions. It feels like investors, the moment they see something positive on trade, they're joyful.
Yes, so we have 13 different times that we've heard that the U.S. and China are speaking and negotiating.
Yeah. Oh, you just mean talks, never mind the headlines.
Forget the headlines and just talks.
Calls.
So the talks are actually happening, and it's true that the market really is primed for good news.
Yes.
It wants to hear something good. You know, in the back of everybody's mind, there's an assumption that there is some kind of deal before the election in 2020. Right?
You know, that's not the only assumption that investors are making here. And we'll come back to the trade deal, but we've got the list of even just a few of them, and you can rattle through them here. We are making a lot of assumptions about good things coming or bad things not happening.
That's right, and even with the sell-off in August and the risk-off move in August, there is so much good news and so much positive stuff for equities priced into the market now. So the market's still pricing in 125 basis points cuts from the beginning of the cutting cycle to the end of 2020.
Yeah, so one quarter we've had.
We actually think that's a lot. So we think we're going to get 25 in September and probably another 25 by the end of the year. But the 2020 cuts are really up in the air. The other thing the market's pricing in is that inflation will never rear its ugly head again. And you have to ask yourself, is it really different this time? And the truth is the CPI numbers and the PCE numbers very slowly are starting to tick up. I wouldn't call it a run on inflation, but I would say that they're not as depressed as they were 6 months ago.
The other thing you're saying, more stimulus from the European Central Bank, we got that. Some form of Brexit deal.
Right. The markets are clearly pricing in a negotiated deal here. Clearly, because otherwise the pound would be much weaker.
Do you think so?
I do think so.
So despite all the chaos that's going on, potentially lying to the Queen, off with his head if necessary, you think a deal is expected?
I think the market's pricing in a negotiated deal, some form of negotiated deal.
Okay, so what does this say for investors right now? Because I see a lot of risks therefore.
So there does look like there's a lot of risks. I'll say this, all the cyclicals really got killed over the summer. So there's a catch-up trade going on. As you just mentioned, the Russell 2000, the small caps have about 7 or 8% to catch up with the S&P performance. So tactically, that feels like the right trade right now. And I'll say this, if the trade war goes to a low simmer as opposed to a hot tit-for-tat tariffs, I think the market moves higher.
Do you?
Because the market can absorb the certainty of the simmer, but it cannot absorb the escalation overnight, slapping on of more tariffs and killing the consumer sector. That's what it can. The market can't absorb that.
You know, this is such a great point. For all the noise and the headline risk, whether it's businesses or whether it's consumers, they can't really react on a day-to-day basis. You have a long-term decision. So if things are really stable, you have some degree of certainty amidst a great deal of uncertainty, I guess.
That's right. And actually, the Fed put out a paper just last week, which was really interesting, that talked about the effect of trade policy uncertainty. And if it was just the first round of tariffs, we actually would be recovered in growth by now, because the economy can handle it. It's the uncertainty that the economy cannot handle.
Such a great point. The uncertainty, not even the actual impact of the tariffs here. We said that in the beginning, didn't we? They're just a tiny fraction. And actually the manufacturing and the industrial section is a small fraction of the US economy too.
That's right.
But it's the fears.
It's the fears. And actually the interesting thing about the ISM manufacturing number is that profits tend to follow that. So even though manufacturing is like 12% of the U.S. economy, you tend to see markdowns in corporate profits when you see the ISM number come down.
So the message to investors here is, as long as the trade remains at simmer, not boiling point again, then this is a good time to invest.
It's probably a good time to invest because you have a global easing cycle, clearly, and yet you do not have a recession, and we really don't think there's a recession here. The way you get a recession here is if you wind up doing the tariffs in the middle of December and you really hurt the consumer sector.
Right.
Because you're already seeing a pulling back of CapEx. So then if you kill the consumer as well, then you have a recession here. But absent that, you're actually set up for a leg upward.
I feel like if President Trump is watching watching TV in the United States, he's heard that message one or two or several times. You're up for an award tonight.
I am.
We're a huge fan of your insight. Talk to me about the award that you're up for tonight.
So I'm up for a Top Women in Asset Management Award tonight. I'm up for the Business Role Model of the Year. It's really exciting. I've been in this business. I love this business. I've been on the investment side as well as the marketing side and the strategy side.
Yep.
And I just think that helping people and businesses and institutions figure out what to do with their capital, how to make it grow, how to take care of their constituents is the most important thing. And so I love the business.
Yeah, you've got our vote. First moves behind you, Alicia. Fantastic to have you on the show. Thank you so much for that. All right, we are counting down to the market open this morning. A positive open expected, as I mentioned, watching some key levels as well too. Coming up in the second half of the show, we're going to be following on with our crypto crazy week to the Ripple CEO. His interview coming up shortly. Stay with us. The market open is next.
You heard me in the shower, did you? Oh, God. I've been doing this all morning. So I had to because I've been doing it all morning, I thought I've just set it up and let it go. Damn. And then I got paranoid as I come out of the shower because I couldn't hear anything. But commercial break, that's fine. We're allowed that. Oh, okay. Right. I'm going to go and get dressed. Don't tell me you can see me. Shit. Okay. Bye. And for your information, my towel covers more than my bikini. Okay. I'll leave you with that note.
Double ringing of the bell here at the New York Stock Exchange this morning. Don't stop was the message, and investors aren't. We have a higher open as expected for the US majors this morning. Goodwill hunting, we called it. Plenty of goodwill. The United States announcing a tariff delay by 2 weeks to take them after the next set of talks with China. The European Central Bank are now announcing a new bond buying program. November 1st, the start date there. Perhaps no surprise, one day after a decision, potentially or not, on whether or not we see a no-deal Brexit as well. Strategic, it feels. Tech stocks among some of the biggest gainers today. The Nasdaq rising for the first time in four sessions. My apologies. Bank stocks also outperformed. They're trading a little bit lower today, continuing to watch bond yields, and they've come down slightly here. We've got the 10-year yield once again below 1.7%. All right, let me walk you through our global movers and the stocks that we're focusing on in the session. Broadcom moving higher. The chip maker reporting after the close tonight. The stock has been on an upward trend but has been underperforming its peers, so we'll be watching for those earnings later. Oracle under a bit of pressure here. The co-CEO of the software company announced on Wednesday he would be taking a medical leave of absence. His co-CEO and also the Oracle founder, Larry Ellison, will take over his duties. The company also posted first quarter revenues that missed expectations. Yelp. This after speculation that the online review company could be a takeover target for Groupon. The Wall Street Journal reported the daily deals company Groupon was looking for an acquisition. Yelp, that was not an exclamation of distress. Yelp is higher in the session so far. The belief is that Yelp could be a good fit. All right, what's going on in the energy space as well? Oil prices falling more than 2.5% right now. The IEA warning of a potential surplus in 2020. The United States also an interesting addition here. Briefly, the world's #1 oil exporter in the month of June. John Defteris joins us now, and he's been speaking with the chief of the IEA. The underlying takeaway, and we've kind of underscored it there, John, is that demand is softening. The trade war here is not helping, and oh boy, is oil, the US exports of oil having a really detrimental impact on the price of oil here. It would be significantly higher without them.
Well, quite a number you saw there in June, right? With the U.S. surging to #1 above Saudi Arabia and Russia. But it's very difficult to see a breakout in prices right now, Julia. According to 3 reports, in fact, that we saw this week, the EIA in the States, OPEC out of Vienna, then the IEA, the International Energy Agency, as you're suggesting, they didn't downgrade the report. They said it's flat, but then they added that caveat that you were talking about here, that it will be, in a word, daunting to mop up that excess supply in 2020. So there could be downward pressure because of the geopolitical elements like U.S.-China trade, but just generally slower growth. And then we have this other twist here that nobody talks about, Julian. I'm glad you brought it up. Let's bring up the graphic here. Between 2009 and 2019, it's extraordinary that we've had 5 countries within OPEC lose more than 6 million barrels a day. The United States filled the void. But you have to wonder, what would oil prices be doing now if that supply was still on the market and you still had that expansion of shale production?
Don't know what I did there.
But the IEA's executive director took the opposite position. What if the shale wasn't there? Let's take a listen.
You should look at the problem from the consumer side as well. If there was no U.S. production growth, we could have seen oil prices skyrocketing, as we have seen in the past when there was a geopolitical tension in the Middle East. We have seen now Iran, Venezuela production is going down. We could have seen oil prices skyrocketing, and thanks to production growth in the United States, we have now stable oil prices.
I'm sure that's not how the big Middle East producers or Russia see that equation, but that's the view of the consumers from Fatih Birol, Julia.
Yeah, and we can't underestimate the pressure this is putting on the OPEC players as well, and the supply cut agreement they've got. But John, we have to wrap it up there. Thank you so much for joining us. We will discuss further in the future, no doubt. John Defteris, thank you so much for that there. The legendary oilman and corporate raider T. Boone Pickens died on Wednesday at the age of 91. Born in Oklahoma, he became known as the Oracle of Oil, and from the 1950s onwards, his investments reshaped the American energy landscape. He's perhaps best known for audacious leverage buyout attempts in the 1980s, targeting companies such as Phillips Petroleum. While the bids all ultimately failed, Pickens made millions in the process. We'll be right back. Stay with First Move.
Okay, yes, I am back. No, I'm not in a towel anymore. And no, I didn't show my boobies. Thank you very much. And I'm a little bit more than 27, but thank you very much for that. Whoever said that to me. I was trying to go backwards and catch up with what I'd lost or missed. And yeah, I managed to turn it around so it was facing me instead. Don't know, because the button's on the top right hand side of the screen, so I have no idea. Of course I would be dressed. I wouldn't run around the house naked. I've got windows people can see in. Now, if I was in my previous house where nobody overlooked me, that would have been a maybe. But could at least play some music while we wait. No, because I don't know what music I'm allowed to put on or not, so I wouldn't take the chance. Did everybody get in touch, or did anyone get in touch with Brad Kimes? Because I spent the last few hours trying to get it. I'm trying to get it onto Twitter live stream, and I couldn't work out how to do that. And then I managed to find it. I couldn't get the app to download onto the TV. The one that downloaded, the CNN one, was actually the American one, not the international one, even though I asked for it to be the international. So I've been going round and round in circles. So finally I just got on my laptop and went, CNN International UK, found this. So so this is the live watch for CNN International. But I thought she said it was going to be 2:35 UK time for this to be the interview. So I can't touch my phone because obviously my Twitter, my Telegram and everything is on there recording. So I'm getting one of my other phones. I don't know whether you can see that one, my old phone, and I'm trying to find the Twitter channel and work out what the time is. Hopefully it'll be after the ads, yeah. But she was quite specific with timing, and we've gone past that, so slightly worried, because nobody wants to be sitting here watching this for the next hour if I've got the hour wrong. Oh, fingers crossed, here we go. Is the sound good enough?
We've been looking at ways cryptocurrencies can be a force for positive change. One example is Ripple. It's a platform used to make international monetary transactions faster and cheaper. Now, one way Ripple facilitates that is by using the cryptocurrency XRP. I asked CEO Brad Garlinghouse to explain what XRP actually is and how it all works. Listen in.
XRP is like a Bitcoin. It's a digital asset. It's today the third most valuable digital asset. And what we do is we take a transaction between banks, and instead of having a bank pre-fund an account at the other bank, which is how correspondent banking works today, the Bank of Brad in dollars would pre-fund the Bank of Julia, perhaps in pounds, and then I would debit and credit that. But that means I have to pre-fund and have dormant capital sitting at that other bank. What we allow banks to do, we allow payment providers to do, is to tap into the liquidity of XRP liquidity. So today there's lots of liquidity between XRP and US dollar. There's lots of liquidity between XRP and British pound. And you could tap into that to move value in real time, in seconds. And even compared to Bitcoin, which takes up to 12 minutes to complete one transaction, XRP is extremely fast at about 3 seconds per transaction. That has meant XRP is extremely scalable in contrast to how Bitcoin works.
So it basically goes, Bank Brad has dollars, dollars get transferred to XRP, then XRP is transferred to sterling, and sterling then hits Bank Julia. That's how it works.
That's exactly right. And so from a consumer point of view and how we're working with, for example, a MoneyGram, the consumer itself doesn't actually see that it's flowing through XRP to solve the problem. What the consumer sees is simply a better product at a better price. That's good for MoneyGram, that's good for MoneyGram's customers. And so we're seeing more momentum than we've ever had around using XRP to move this liquidity around the world. And so we couldn't really be happier about how that has played out in a world where there's still a lot, I think, of FUD, a lot of uncertainty, a lot of doubt about what's going on in crypto. This is a real use case solving a real problem for real customers.
Okay, so which banks right now are actually using Ripple?
Well, we have signed up about over 200 banks around the world. Some of those banks just use our software to do that debit and credit, fiat to fiat, and some of them are using XRP in those flows. We have banks like Santander that we've been working with for years and are moving lots of volume through the Ripple's technology. And then, as I mentioned earlier, payment providers like MoneyGram or RIA or Asimov that are using XRP actually to move that liquidity and really reducing their costs and improving the product.
Just in terms of the transactions, though, that you're seeing using Ripple, what proportion of those actually use XRP versus direct, and just where do you see that ratio going? I'm just trying to get a sense of sort of how much XRP itself is actually used as part of the Ripple platform.
So I would say the order of magnitude, the way to think about it, is similar to the proportion of customers. So if we've got, I don't know, a couple hundred customers we have launched, 10 to 15 of them we've talked about using XRP. I would use that ratio as the total ratio between what's happening with Ripple's technology overall.
How overall? Okay, institutions using Ripple can choose whether to use the cryptocurrency XRP. Some do, some don't, as you just heard there. XRP, like Bitcoin and other cryptocurrencies, has been volatile. I asked Brad if the message to investors is don't use XRP to speculate.
People are going to speculate on different asset classes. People speculate on gold, currencies. You name it, people are going to speculate. When we think about this, and what I've said very publicly is I think the long-term value of any digital asset is going to be derived from the utility it delivers. There is a lot of hype in the crypto market space. We've seen that even recently. We a lot of attention around what's going on with Libra and Facebook's announcement around Libra. Today, that's just a white paper. It actually isn't. It isn't live. It hasn't launched. And so I think the hype often gets ahead of reality in many technologies. And I think that's true in the crypto space as well. What I would encourage any person looking at this marketplace is to really understand what is real, what is not real, and understand, is there a use case? Is there a utility? Bitcoin, I'm long Bitcoin, and Bitcoin I think has real utility around being a store of value. It's digital gold. But if a Bitcoin transaction takes on average 12 minutes to confirm and the transaction cost is over $1 per transaction, that's not going to be great for a payments solution. So around payments, we think XRP is uniquely and extremely well positioned to solve that payments problem. It's extremely fast at about 3 seconds per transaction, and it costs about 1/1000th of a penny to actually enable that transaction. So we often make the point that where Bitcoin is very profound in solving that store of value, an XRP transaction's about 1,000 times faster and it's about 1,000 times cheaper per transaction.
I saw some Twitter traffic, one in particular, Crypto Bitlord, that's threatened to take over because they say that you, the company, is dumping, that you're pushing supply out to the market. Can you explain to me the difference between XRP and Bitcoin with regards supply and with regards how much ownership Ripple itself actually has as a proportion of XRP out there at this moment?
Okay, so the first thing to understand is these are all open source technologies. When people talk about forking technologies, you have seen Bitcoin forked multiple times. You have Bitcoin Cash, Bitcoin BSV, Bitcoin Cash, Bitcoin Diamond, Bitcoin. I can't name them all. There's 4 or 5 forks of the Bitcoin blockchain. Bitcoin, obviously, the primary BTC has remained kind of the most notable. But in the same way, people can take XRP and open source technology, and hypothetically, they could fork that if they chose to do so. Now, around the ownership piece, as is the case with Bitcoin, there's some big whales that were early in the Bitcoin community. There's one wallet that has 1 million Bitcoin in it. Nobody knows who owns it. In the XRP community, Ripple is the largest owner. And the point I have made is we are the most interested party in the success of the XRP ecosystem. We're very focused on our use case and how do we solve problems with XRP. But one of the things I'm excited about is you're seeing a growing ecosystem of other players investing in other use cases around XRP. Just recently, we announced a partnership with Coil, which is doing micropayments for content. So next time you're reading a story on the Financial Times website and you hit that paywall, you hypothetically could just pay, hey, here's a dime, here's a quarter, here's 50 cents. Where today, that's a pretty hard problem. And companies like Coil are going to use XRP for those micropayment transactions. So yes, Ripple owns a lot of XRP. We're very interested in the success of XRP. But the accusations of us dumping, that's not in our best interest to do that. We're clearly interested in a healthy, successful ecosystem, and so we would never do that, and in fact have taken steps to lock up most of the XRP we own in escrow such that we can't touch it.
Interesting. So, but you agree that you can control the price to some degree because ultimately the Ripple community has so much power, no?
No, I mean, if you look at the correlations between XRP and most of the crypto market, or what are often called the altcoins, you see a very high degree of correlation. Ripple can't control the price of XRP any more than the whales can control the price of Bitcoin. Some of these markets, particularly smaller tokens that are have a lower market cap and lower float, if you will, they are at risk of people manipulating them. But you're talking about XRP trades, order of magnitude $1 billion, according to CoinMarketCap, trades, on an order of magnitude $1 billion a day of activity. So I don't think anybody's in a position to really manipulate those prices.
It's quite funny. One of the big questions that I was asked when I was talking to people about XRP, they said, what price do you sell XRP to the financial institutions that you're dealing with here? Do you give them a discount, and is there a lockup? Can you answer those questions? Because this kept coming up.
Yeah, sure. So let's use MoneyGram as the example. When MoneyGram is moving money from US dollar to Mexican peso, they're buying at market. They're not. There's no special sweetheart deal there. There are times when we work with institutional investors who might say, hey, we want to buy $10 million of XRP, and we would have lockups that would prevent them from dumping. We don't want some other party buying a whole lot of XRP and dumping it on the market. And so we would hypothetically have restrictions about what they could sell and what, how often. And usually those are based upon volume in the market.
Yeah, so you might give them it slightly cheaper, but you say to them, hey, you're not allowed to sell it for 6 months, let's say, or a year.
Yeah, correct. That's basically correct.
So just at a time when cryptocurrency investments are battling to become more mainstream, a behemoth facing some skepticism on its own part is trying to enter the space. Facebook announced plans to launch its own cryptocurrency recently, Libra. Now, their scale could be potent. Could that be a bad thing or a good thing, though, going forward? I asked Brad that very question.
I think it's been net good for the industry to bring the attention that Libra has brought on the industry. I think that part of the maturation of the industry is that transparency and that debate, that healthy debate. And so net, I think it's been a good thing. I think it's way too early to predict exactly what the implications are going to be. Facebook obviously is a consumer-oriented company, came out and talked about how they're more aggressively competing with financial institutions. They highlighted Western Union as an example. And so our view is, hey, we can partner with those financial institutions and help them solve a problem at scale that we've talked about here. So I think it's too early to tell. I think Facebook came out in a way that probably wasn't as engaging to regulators as maybe they could have been, and that stirred up a lot of concern. And we've made the point that we shouldn't paint the entire crypto industry with a broad brush. There's different types of projects. Some are trying to be very regulatory compliant, like what Ripple is doing with XRP. There's also some that are trying to circumvent regulators, things like Monero, that are intentionally trying to be, they're about anonymity. And so I think, as regulators look at the category, they just need to be thoughtful about not painting it with one broad brush, and that's really what we've tried to emphasize.
The CEO of Ripple there. Now, speaking of Libra, the French government is coming out strongly against it. The French finance minister saying This eventual privatization of money contains risks of abuse of dominant position and contains risks to sovereignty and risks for consumers and for companies. He also pointed to a systemic risk due to the sheer number of Facebook users, 2 billion people. For those reasons, according to Lamare, Libra cannot be developed in Europe. The challenges remain. All right, coming up on First Move, the companies taking aim at American gun
Okay,
violence.
people.
White Uber, Levi Strauss,
Jump
and
from here,
many
go straight
more
onto
are
Brad Kime's
criticizing
channel,
Congress
please.
and calling
I'm
for
gonna
action. Next.
close this off. Okay, done.